One sentence from Meta, one bad financial news headline, and global AI chip stocks got crushed again. About $450 billion in market value gone. When I saw that headline, my first thought wasn't, is AI compute really oversupplied? It was, the market is freaking out again. Here's what Zuckerberg actually meant. Meta still needs a huge amount of compute for its own AI business, so for now, it isn't selling that capacity outside. But if it overbuilds data centers in the future and some capacity sits unused, it could sell that capacity through cloud services and turn it into revenue. That's it. But one headline quickly became Meta has too much AI compute. And suddenly chips, memory, servers, everything sold off together. South Korea, one of the world's biggest picks and shovels markets for AI hardware, even hit another trading halt. Seriously, one sentence became a global stress test for AI stocks, and the timing made it even more absurd. Just days earlier, Google was reportedly so short on capacity that it limited Meta's access to Gemini. Big tech was still racing to build data centers. Chips were tight, power was tight, servers were tight. Then a few days later, one headline appears and suddenly the story becomes AI compute is oversupplied. Sell first, ask questions later. So is Meta really sitting on too much compute right now? It doesn't look that way. Meta is still spending heavily on AI, still building data centers, still buying compute, still training models. A company can keep expanding aggressively and still say, if we have spare capacity one day, maybe we should sell it. To me, that sounds less like failure and more like monetization. Because AI is insanely expensive. Chips, servers, power, engineers, AI is basically a funeral for dollar bills. If all that compute can only be used internally, it's just a cost. But if some capacity, model access, or cloud services can eventually be sold, then part of that cost can become a business. Microsoft has Azure, Google has Google Cloud. They use compute themselves, but they also sell it. Meta mostly makes money from social platforms and advertising. It doesn't really have a hyperscale cloud business. So maybe Zuckerberg's real question is simple. The money is already spent, the data centers are being built. Can they eventually earn something back? That's the part one thing matters. The AI race isn't only about whose model is smartest, it's also about power, financing, infrastructure, and monetization. One slower model doesn't mean the AI industry is over. One scary headline doesn't mean compute is suddenly oversupplied everywhere. Short term, markets often trade emotion before facts, so I'm not changing my long term strategy because of one headline. You can run fast, and the market will still say you're not fast enough. My plan stays simple. Don't panic, don't do anything stupid, and keep investing. This isn't a 1 week experiment. It isn't a 1 month experiment. It's a 20-year DCA experiment. Now, here's my week 3 update. My S&P 500 index fund has received $180.30 so far. My Nasdaq 100 index fund has received $116.90. Total invested $296.80. Current cumulative P&L minus $3.50. Total return minus 1.16%. That's this week's contribution and performance summary. This plan will run for 20 years with total plan contributions of $96,000. No get rich quick story, just consistent investing and time. How much will it grow into? Follow along, I'll keep updating the journey and let's build wealth slowly together.